Good morning, good afternoon, and good evening to you all, wherever you are joining me at this moment. I say welcome to 125th edition of Investdata Trading Academy live with Ambrose. I will tell you that the market is still, global market is still in red, extending the panic or risk adjustment of what happened on Friday after the chairman of no Fed make a comment that yes, they are likely to also hike rate despite the slowdown, inflation, and also on that, this is also reflecting already in the market this morning. That 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 is what also expanding in the market as we speak now. It's also reflecting already this morning across the globe. Yes, I would say that as we speak now that the global market at this moment or at this hour are in red, extending the negative reaction to Friday speech of the chairman. In this, in the midst of of a stronger dollar and also jump in bond yields, just as investors across the globe are also kind of weighing the impact of this, this rate, another rate hike again, in the market across the globe. You can see all of them are looking at. Also, don't forget that there's a looming shutdown of gas, by Russia. These are what investors across the globe are looking at, especially in US and Europe. You can see that this hour, the stocks market there or the indices there are also in red as we speak because investors are yet to look at what will trigger the market this week. Especially, hope we were still also expecting that some economic data will be emerging from different markets in Europe. We expect to see inflation figure in US also to see the opposite management index for the month of August. And although these economic data are coming, if it depends on the strength or the positive or the position of these numbers, that will see that this week might see also miss market for all this globe to see that where the market is going from this direction. But I'll tell you that this fear is also what is putting the market down at this Monday morning as the market has opened across the globe as we speak. But don't also forget that the oil price as we speak has also rebounded again slightly to trade at around $101.02 per barrel, and which is also good. That means market the commodity market, especially crude oil, has extended the rebound of last week into this morning. Might not up again. For me, it's also a good one. And don't forget that as this oil price is also oscillating, it's also affecting other market in terms of oil movement. Price oil is very important in terms of determining economic activities. The fear of likely kind of cut in supply has also supported this kind of rebound we're seeing in oil price as we speak. And don't forget that the news of rate hike again have not affect across all the different windows because of rate is very important. Just like I always say that anywhere in the world, when there's rate hike, funds are likely to leave the equity space to where there is what there is a kind of low risk and also higher return yield in terms of hike in rate that's also going to support those markets. That's why the circular flow of funds will always continue in any market. Just as we speak this morning, these are what's also affecting the matured market because prices of or the yields of most bond in this market has jumped up this morning because of that likely expectation of what of fear of rate hike again in September meeting of most of the central banks of the world. That on that, also you can look at what's happening in crypto market, look at what's happening in FX market, commodity market. This oscillation continue. Fear of this rate hike has kind of dampen investors' their confidence this morning. That is why I see all market and the red. Don't forget that equity market will always react to what to news. That news was also what is also putting the market in this position. For I mean, it's not a total bad one, but don't forget that we will read that when market pull back, it creates opportunity to buy. Like I always say that when market is changing like this, you as a trader or investor also need to change your strategy. Which I've discussed what to do when it comes to this kind of state, that how you also change your strategy, what you should do new and how you should go. Yes, I will tell you that if you look at technical analysis, the classical analysis or the theories of technical analysis, not all is working in this kind of market because of what the pattern of the market has changed, trading pattern. Also, the smart money in the market has also changed their style of what or transaction. That's why I said when I say change your strategy, these are the things because if you look at the some classic technical analysis rules or patterns, you can see that most of these patterns are not being sustained this time, because when this thing was discussed or thought or were published, when the difference between now and then is very, very wide. That's why the buying pattern of people in the market, you know that the market is a function of buying and selling. And this buyers and sellers in the market, they have different strategy, they have different objectives, they have different feelings and different thought. And that's why when market is like this, knowing that the funds that go to move the market are coming from this what the smart money, the bigger institutional investors, and also they too are also changing their strategy or how to trade. And that's why you as a trader, I will tell you that you must adopt a new trading strategy. Yes, look at your chart very well, and also the way to read your chart also has also changed in terms of technical analysis. These are the things that you need to do. I know that yes, most investors or traders at the last week before now are positioned that think, well, now that we're seeing another fear for rate hike has come, don't totally that you push out of the market, set your stop loss, I've always said, set up your entry and exit goal, exit strategies, and also your profit target. This will help you as we speak. Yes, as we speak now, US market indices are down as Europe stocks are also have slumped this morning, while that of Asia and Africa are still missed. As we speak now, the market here in Nigeria, there is the MGS has slightly inch up. It just went inch up slightly up now in green at this moment. Take at least the oscillation in the market, and also don't forget that market last week here down here in Nigeria, we saw that the market tried to breathe out, and this breathe out is part of the market. That's why market goes also up and down. Market will release air and also take in air, and that is that up and down you are seeing in the market. Now we are seeing a little breathe out. The market kind of cross the T line. When we come to technical analysis, we start to see that a little for the week order that ended last week on Friday, gaining about 0.63. Yes, we saw that the life of Ether and others, high caps will push the market up. But this morning, as we are seeing, the market has oscillated, this morning before crossing to green at this hour, at this midday. For me, it's a good one, but you can see that the market is still quiet in terms of activities and in terms of volume. It tells you that market is also waiting for a trigger, and this is also we are not entering going to the new month of September. And like a history in the market, when you look at technical data for the market, September is also a mixed month for the market. But I believe that with changes we expect in terms of activities for end of the month between now and tomorrow for the month of August to end, that will also give a clue where the market will end. Also, don't forget that the month of September is another quarter end, and that tells you that as we're looking at quarter end for month of September to usher in another earning season in October, as a traders and investor, you should have mastered that by this time we expect this trend to continue. But in the first week and second week of September, we're going to see market up and down before we start seeing position taken towards the third quarter and the last week and the third week of September. For me, keep your eyes in the market, and also if because of fear, you can now breathe in and breathe out. That's why market goes up and down. For you to watch your position where the market is going from here. There is no cause for alarm as we speak, and that is how to to take your breath and also relax and invest with the information. Why I say so is that the market might be looking somehow to you, but don't just don't relax your mind and know that yes, the market is also a place that you can take a decision to make a good wealth for yourself or to create wealth for yourself, because the pattern of the market has changed, and that's why I said you must also change your strategy. And also, if you want to read your chart this time, like I always say that your price action and candlestick are very, very important. But also you need to look at what is the price structure. This price structure has to be looking at what the technical tools, and also at the same time combining the price action, which is the price structure with what with your indicators. Indicators can come in form of either the CCI, the CCI, which is the commodity channel index, or you can also use the what we call MACD, or you can go for the exponential moving average exponentials, just like we use a T line for 8 days. I can use all those ones to also combine to make. And also money flow is very, very important when you are looking at your chart. And don't forget that, like for this week now, giving you the money flow for the quarter review. At the end of the day, why we give that? You know what is behind these prices and know where they are going. And money flow represents sentiment, because the market is about psychology, buyer and sellers, and these are the ones that bring the activities in the market. It's when the buyers are more than the sellers that you can see the price of. But when sellers are more, prices are likely to come down. This way, you need to understand the market sentiment, where the market is going, and money flow will help you to know exactly where fund is entering and know where it's not entering. Also, you need to also to trade news. News is very, very important. Like I said that this week, because of expected economic news, might see market oscillating globally or even down here, because we also to expect to see the August policy manager for Nigeria market, which will come from either Stanbic or Central Bank, this week before this week runs out. These are the things that will give you. We have already seen the GDP down here in Nigeria. That yes, our GDP will show that it sustained a positive trend, which is good. Yeah, despite that, if you look at the difference between the GDP in Q1 and Q2, just about 13.8%, no change from no from 3.11 to about 3.54. Yes, if you also look at the inflation figure, almost fair 20% as we speak now, 19.64. That is which these are the things you want to look at, and inflation and interest rate remain also high at a 14. No, the NPR at a 14%. You can see that the things we're looking at. Yes, if you say looking at this figure now that we've seen from GDP number, is it likely that CPN will increase the rate again in the month of September, the next MPC meeting? Yes, you can see that recently they also hike in what we call savings account return rate, about 30% of that of the NPR. You can see what it does to encourage savings, and also at the same time, if you're having savings, you can think of investment. But if you look at the savings we are looking at now and the interest rate and the inflation rate, I mean, you know that even the savings we are doing is not here and there, because if you encourage somebody to save at almost either 4% or 4% or around 3.1%, and inflation is around 19.64, and there's no increment in the person's salary, and that means high cost of goods and services is increment. There's no increment in salary. To save now become a problem. These are the things we look at. That's why I expect that in the next MPC meeting, I think these are the things the CPN, the MPC members will factor in and see. For me, I will expect that they should watch and see the impact of this back-to-back hike they have done. What's going to be in the economy between now and end of the year? Fine, they decide to also to adjust it up. It might not be also more than 25% or 50 mass, but that will not be too good. That will further siphon was a kind of a siphon liquidity in the system, and that will also cost even the cost push that already has been marketed. Cost of fund is high, and cost already is inflation. That's not the liquidity problem. Cost push, the supply chain is having issue. These are the things that CBN should also look at how to address this issue. But I believe this also has to do with the next government that will come. This has to sit down to address the issue, because I know it's not easy, but we believe that since the economy has maintained a positive GDP, and there are some sectors that equally also supported that GDP, as I've discussed in the last live class on Q&A, that those factors that supported the GDP is where investors should also look at and see what they can make from that industries, looking at their fundamental, looking at their technical position, and at the same time, what is the sentiment for the sector they are going, or the sentiment for the individual stock they are looking at. These are very, very key things that investors should do at this point, because that is the only way to stay ahead of the market. Because if you really want to stay ahead of the market, you must master what is happening, understand the market flow, and what really the circle of the market, where the market is at a particular time. Once you have this at your fingertip, it will help you to go a long way. Like I said, if you're reading your chart now, yes, we're looking at your price action, talk about the price structure, talk about money flow, talk about news. These are the things that you should use to know where the sentiment is going, what to do. And also, like I said earlier, that most of the smart money has changed their strategy. And that's why I said, when the market is in this kind of situation, you as a trader, you also change your strategy. If it's well for you to take a break, it's nothing stop you to take that. You want to watch the trend again before you jump in with your cash, enter, so that you can see opportunity to see cash to enter in opportunity that you spot, in this environment at this point in time. That's why I will encourage you, keep your eyes in the market and also follow what is happening in the market, so that at the end of the day, you become a better investor, that also your bottom line will reflect that situation, because you learn every day. As you are trading, it's not only about profit, it's about what having a good strategy, also learning another way of approaching the market, because things are changing. You're also expected to change your strategy, as I've earlier encouraged. That yes, you have your trade setup, have your routine activities. Another thing again is that watch to see where you can take break, and at the same time where also you can also jump into what position when identified on time. Yes, we really want to look at what is happening on the chart now in the live market. This is our chart here. You can see that the market has continued to make lower low, but now you can see a lower high. Now you can see it here. market are broken out from the from this situation. You can see this top here or resistance here. Market are broken now at this level again. But as we speak now, market is also in a side trending mode. What it was a flat market that we had on Friday 0.04. This morning market is slightly in green as we speak now. Let's call other indicators to really watch the market. I will call up the CCR, very important. Then let's call our T line, at the same time call up the money flow. These are the things you need to always use in the market. This money flow will tell you what is happening. Is there liquidity in the market or liquidity is leaving the market? You know, no problem. You know exactly what you are doing. The T line here, we need to change it to 8 for our own easy catch, buy and sell signals that will come with the on the price action or index action. As we speak now, you can see the market currently. Then by Thursday last week when the market we didn't hear that our class was not we didn't hear the class that day. As now you can see that was where we saw this green candlestick when the market gained about almost 2% that same day. It crossed back the T line, but that does not say you automatically yes the market is back, but you need to watch. But it's a sign that those high cap stocks that continue to support the market, most of them are still very strong and they will still support the market. I believe that we won't start seeing also the Q3 numbers, we might see market, but this is a sign that market is back now above the T line. Even as of Friday, market is still above the T line. Even as we speak this moment, let's take it so you can look at it very well and see what I'm saying. As we speak now, you can see that market is still above the T line. This is today's market now. You can see very tiny gain 0.001. The market is up here, and this is how you look at the market as we speak now. Market was seeing money flow looking up on a day chart. But let's go back and see more of the situation in the market. Yes, as we speak, I'll tell you that market is slightly up with the market is reading 49,685.15. That market is up by just 3.01 points. That's about 0.001 in the up direction. If you look at the market breadth is positive. We're seeing 8 gainers against 6 losers. Among the 6 losers, we have Cavaton topping the charts, followed by Japan Gold, you can see Owado, GT Code, and Stanbic. Stanbic has slowed down. Stanbic is around 30 naira 45. That means it's down just by 5 kobo. You can see that the power of liquidity in the market with that impressive number and high dividend yield for Stanbic. You can see that's why I said investors should look beware of these stocks and hold them for a while until we see improved liquidity. You can see now Stanbic with that number. If you have to beware the liquidity in the market, you can see where the stock is going. This is for the top losers. For the gainers, we are seeing Multiverse leading the pack now for the gainer start, followed by COVID business solution. You can see NACO lead among them. You can see Japan, Jaiz Bank, and also Champs. These are the also Zenith Bank is in that category, but marginally also gain. And these are the top gainers as we speak. But the market feed on what? On volume, and these are what really prepare movement. But volume as we speak is still very low. But you can see that the top trader in terms of volume, one is there is Jaiz Bank is followed by Mutual Benefit and Zenith Bank, UBA, and Sterling Bank. These are the top trade in terms of volume as we speak. Volume is one of the things that tech analysts that we don't joke with, because volume and price they determine where the market. That's why if you look at most of the indicators, the combination of volume and price and why the sentiment of where fund is going. These are the things you need to know. For volume, it adds fuel to price movement. It also gives you a sign. That's why a volume pattern of any stock in the market or chart is very important. You want to see what is the volume saying at that particular time and what is fund going. You can look at the volume and where the fund is going. Is it a buy or sell volume or you will know. Once you're able to identify that, it will also help you to know exactly what to do in that particular time of the market. Yes, we will now look at look at the index unit. We want to look at what is happening in Zenith, in UBA, Sterling Bank. Then this GT code that is also on the decline side. We look at GT code and Stanbic tired of movement. yes, we are seeing no NACO after markdown featuring also on the gainer chart now. But now we can see also we see the life of Jaiz Bank on the top trade and also on the gainer chart. We'll look at this stock now this morning to know exactly where they are going. We know that as I told earlier that yes, because of the decline in price of GTB, consider if you look at the market now, consider the GTB yield. It's like it won't lead in the market now because of the price have remained in a downward movement as a result of where the Q1 number was not too impressive following the pattern that we saw in 2021. That's what I believe that the Q2 number will give investors where the direction where the stock is going, and that will also change the momentum or the sentiment behind GTB. But as we speak now, for those that are looking for income, dividend income, I think for GTB, this price is also attractive. And don't forget that it's not for the only tactical dividend yield we are looking at. We are looking at the tactical and what they pay at the end of the year. And don't forget that after the election, we're having a post-election market activities, which we know that will come by next year. And these companies were expecting to see their third quarter in October. But let's look forward to see the result of GTB and that of UBA and Access Bank that are standing. Know that the Fidelity will not be paying a dividend, but they will come out also their audited account to know the position of the bank as at the half year, which is also equally good. Now, we have seen look at the market on a day chart. You can see that it still believe above the T line, still maintain that. But money flow is also looking up. Why MACD as we speak now? Sorry, TCRI is also around the getting to the point. This point here is very very important. You can see from here to here is 100, from here to here is 100. It's still within getting to the zero level. Once it cross, know that strength is still there. But to speak, that's crossed below the 100, negative 100 down, then approaching 200 before it rebounded. Let's see once it touch this place, this 100. Once it go out, but where it is now, market said that there's still strength for this a short rally. You can see that I've come to this level, but it's not a breakout from here. That is zero level now. That will not know where the market is going from here in terms of CCR. But for money flow has come back to 50 on the daily chart. 50 point on two for me. Which you know that once the money flow touch 50, it's a sign that fund is maintaining. When it crosses up, maintaining the uptrend, that is good for the market. We are seeing a positive for money flow now this morning. I can see that your scale is not looking up, not looking down. But let us watch and see. And then your price index action is still trending above the T line marginally. But let's look at the 1 hour chart for the day. That will give us as a matter what I see that is still above the T line. Our money flow confirm yes that is also up, looking up here on 1 hour. Tell that we need to reach 52 for the 1 hour chart. That is good. And if you can still try to see what is it doing in 15 minutes, that is also very very important. That's what the market is doing to 15 because it's already flat with the T line. The T line, the market is on top of it, and also we are seeing a positive move in terms of what, in terms of money flow, looking up again on that. That means for me, the market is still very strong this morning or this afternoon. Let's keep our finger crossed for the market. Let's come back to the day chart here. Yes, and now I want to look at what is happening in Jaiz Bank. Let's start with Jaiz Bank first. Let's see what is happening there. The top, the Jaiz Bank. I'll tell you, Jaiz Bank is leading the top trade at the same time on the gainer chart. Let's look at what is happening in Jaiz Bank. Jaiz Bank on the day chart, you can see. I'll tell you, on the day chart, the stock is trading above the T line. Fine, good one. You can see it here, and as we speak, it's still it has crossed the negative the point of the zero, that is positive, but now still has not touched 100, no positive, but it has crossed the center line, which is good. But it's a good one for the market for Jaiz Bank. I think it's positive. Money flow is now looking up in the 1 hour chart. You can see that's why it's still around 20 below 50, but it's a good sign that the indicators, momentum indicators, are confirming the price action of the stock. As we speak now, as it remains above the T line. Look at 1 hour for Jaiz Bank and see what it's doing. For 1 hour, Jaiz Bank is mixed. You can see that these two candlesticks telling that this stock is trying to also pull back here. You can see a strong volume here. We are seeing this for 1 hour for 1 hour chart. You can see looking down, you know, looking down, around the negative 30 down. For me, there's also money flow still high if you want on a 1 hour chart. Let's quickly look at what is happening in Zenith Bank before we move to others. Let's look at what is happening in Zenith Bank. Is this sustainable? Let's see what is happening in Zenith Bank. Zenith Bank on 1 hour chart is very considered just a consolidating trend we are seeing here on the 1 hour chart. There's no breakout and flat with the money flow with the T line, and money flow is looking down the 1 hour chart. And you can see that the user is negative now, is below the zero, negative, and almost does not touch 100. For me, it's a sign of weakness, but see, let's look at a day chart, what the day chart is talking about Zenith Bank now. And data you can see that it's also flat on the T line, and money flow is still strong around 75. Good. I can see that it's above it's not trading above the 100, but it's above the zero. But that will tell you that the spread is not strong as such. It's a short-term uptrend. You can see it here for Zenith Bank. Fine, good one for Zenith Bank. That's maintained strength. Despite the price has not moved, market has not reacted to the dividend of 30 people, which I know that market might not do much now for the stock to go up, depending on when liquidity start coming to the market. Yeah, as we speak, despite there's a little pullback in UBA, we're still trading at above the T line. If you look at this day chart, you can look at this candle here. These are really like double top here and here now. This 7 naira 18 or 7 naira 20 kobo, this point and this point. These are, you can see here and here are double top. Guess what? If you break out, fine. And don't forget I said that most of the pattern that worked before now, because of changes and the volatility in the market, most of these stocks are not working. Let's work and see whether they break out. But the good thing that we are seeing that it has crossed to positive 50. I mean, it has crossed to zero. It's on the positive side, uptrend, which is good. We are seeing money flow looking at up that, and that you can see this prices here above the T line or the price action, which is good. That's why there's a little red position here. But look at the 1 hour chart for UBA. 1 hour chart for UBA as we speak, you can see it's slightly below what, slightly also above the, after that touch aside, it's almost 720 this morning. You can see that that's why we are seeing kind of more the CCI looking down here. And money flow is also looking up below 50 as we speak for UBA. Yes, quick one. Let's look at the Stanbic and the GT code before we round up the class because of our time. What is Stanbic doing with the result that we have seen? But that should not say you should panic and sell off your Stanbic. There's still potential for Stanbic, or you don't know who your position and what is Stanbic thing. Stanbic can see here, that's why the sell off now can see, or the position taking, profit taking here, you can see it's still marginal. But for me, on a 1 hour chart, not looking too good. You can see that money flow is looking down, and you can see where it dropped after the pullback and trend is coming down. Yet it has not gone to the negative side, but this is a weak sign already for the stock. Let's look at the day chart. A day chart, you can see it's above the T line. You can see that almost around 30, 45, 30, 40, 43, 40, yeah, 30, 43, slightly down. But the good thing is that tested the 100 before. You can see it now for the CCI. For me, it's also okay, but you need to also watch the stock because it's coming down gradually. You can see from there. That's what. And the money flow is still strong, above 50 and 351, something good. Still looking up. Let's keep our finger crossed for Stanbic. Let's look at GTP, the last one, before we can call the class a day. GT code, as we speak now, is trading below the T line on the 1 hour on a day chart. You can see it here. The T line is above. You can see also that it's negative. It has gone below what the 100 point, which is there here. You can see that's why it's below this. Yes, Mercedes oversold region with my attract one, but let's want to confirm that oversold region as we speak now, that made the stock attractive. We need to see a reversal before you can jump in for this at overall. But for those that are income investor at this price of 1990 or 1995, yes, nothing stops you from taking position at the price at this one. Let's see how it will go. But as we speak now, technically, the stock is not looking good. It's below the T line. You can see that other momentum indicators are saying that yes, is still a bearish state for the stock now. I see that it's already going to overbought, oversold region. And also reward. We need to confirm a reversal before you can jump in. That means strength and come back to the stock. Money flow is still looking down, but try to cough up, below 10. For me, let's keep our finger crossed for GTB. Yes, I will say thank you for today, and also thanks for understanding for last week. The Friday and Thursday, I was not around. Of this week, hopefully we'll be around together. Yes, I also encourage you for those that attended the master class for the month of for third quarter. Yes, most of the position, few of them are in green, and because of the change in the market, but I believe that most of those positions also will go for the next master class that is coming up in October. And don't forget that the last quarter of the year is most active quarter. Most of the activities that we will see, if also we see a positive number that market we saw in Q1 and Q2 in Q3, I will tell you that then we expect funds to start coming to the market, from the smart money. And there's a new techniques also I'm looking at in terms of technical analysis. I'm going to use in that master class. That will help us to see that's why I say change your strategy. I'm going to tell us what to have changed the strategy technically, how to get our buy position, where trend become your strength. These are what we want to discuss in that coming master class. Look forward to see you. I believe by next week or thereafter we'll start also pushing out for the master class. For those that attended the last one, your position are still very important. That's why we're not giving you any sell signal. Just for your position. Once they touch our target, you'll be alerted to take the right action of existing. But now those stocks are still very tight. There's nothing that changed in those stocks. That's why we're not giving you a sell alert for those that attended the last master class. Just for your position and see at the end of the last quarter of the year master class that's coming in October. Yes, you know that yes, you have taken the right decision to attend the two, and that also was part of your portfolio. There's no fear of electoral activities or political activities for me. No, we have not seen that impacting much in the market until now. Let's see what will happen. We expect also liquidity apart of political activities will also start coming back to the market. Let's see how it flows between now and the end of the year. But I believe that for those that are at master class to bed, just be warming up for the next master class for October. Then the right stocks to buy, and also we are changing strategy already because of what is happening in the market. That's why we're going to pick stocks again that was also going to be for the next 90 days from the master class. That will usher us into the new year. And don't forget that we still have activities between now and that January. This is time for to but as things are unfolding, we know that election proper will be coming in February 2023. But before then, we have to take advantage of what we are seeing in the market. Where we want to go defense, we do. Where we have to buy to preserve our capital, we do. Where we also can take advantage of the market situation to go into short trading, we also will take when time comes. I'll say thank you and enjoy the rest of your trading day.